It is now a well-established fact that because of the lockdown imposed in the wake of COVID-19 spread, the world economy is going deeper and deeper into the crisis. And to prevent the world economy from further falling into the crisis, world experts and economic strategists have come together to draw various strategies. And one such strategy put forth by these experts is resorting to helicopter money. This term has been making rounds in the past 1 week both in print media as well as electronic media. So what does basically this term mean? That is, what is helicopter money? Why we should resort to it? What are its benefits and what are its disadvantages? And what is the basic difference between quantitative easing and helicopter money? So hello guys, and welcome back to another lazy lesson by Insights IAS. Now before going further, have a look at this question. Consider the following statements. Statement 1. Helicopter money refers to printing large sums of money and distributing it to the public. Second statement, money obtained so need not be paid back to the central bank by the government. So which of the above statements is or are correct? By the end of this discussion, you should be able to clearly answer this question. Now what does helicopter money actually mean? Does it mean sending a large sums of money in helicopters and dropping over public in various towns and cities? Precisely no, because there is actually some difference between its literal meaning and the contextual meaning. So what then is the helicopter money? Well, it is an unconventional monetary policy tool which involves printing large sums of money and distributing it to the public free of cost. So the main features of helicopter money are: firstly, it is an unconventional monetary policy tool and it involves printing large sums of money, and thirdly, this money is distributed to the public free of cost. And this term was coined by famous American economist Milton Friedman in 1969, and he was also awarded Nobel Prize in Economic Sciences in 1976. So Friedman used this term to signify unexpectedly dumping money onto a struggling economy with the intention to shock it out of a deep slump. Under such a policy, usually the central bank of any country, here in the case of India it is RBI, increases direct money supply in the economy through the government. Here the basic aim of this tool is to increase the demand as well as inflation in the economy. And one significant key feature of the helicopter money is that the central government does not have any liability on this. This essentially means that the central government does not have to repay the amount received through the RBI. And secondly, there is no interest charged on the amount received. So this is the key difference or basic difference between quantitative easing and helicopter money. In case of quantitative easing, the central bank lends some money to the central government in exchange of bonds worth of so much money. So this means the central government has to repay the amount received under the quantitative easing mode, say after a period of 6 months. Whereas the money received in the form of helicopter money need not be paid back to the Reserve Bank of India by the central government. It is just like a bonus. So here are some of the key differences between the money received under quantitative easing and money received as helicopter money. Firstly, it is the coordination with fiscal policy. So in case of quantitative easing, there might be relation with fiscal policy. That is, the central government might request the Reserve Bank of India to step in to ease the economic crisis or situation. Or the central bank all by itself step in to ease the situation. So there is a possibility of coordination with fiscal policy in case of quantitative easing. Whereas in case of helicopter money, there is definitely coordination with the fiscal policy, which means at the request of the central government, the Reserve Bank decides to print the money and give it to the central bank to ease the economic crisis or situation. And the second impact or effect is with respect to the central bank's balance sheet. So in case of quantitative easing, this implication is temporary or short-lived. What this means? This means after a certain period of time, say for 3 months or 6 months, the central government is repaying back the amount so received. But in case of helicopter money, this implication is permanent, which means the central government is never going to pay back this amount received by the Reserve Bank of India. So it is permanently added to the balance sheet of the Reserve Bank of India. And the next difference here is with respect to the usage of money so received. In case of quantitative easing, the money is injected into financial markets. How? This is done through reduction in interest rates or providing more loans through the banks or other financial institutions, etc. Whereas in case of helicopter money, the public are directly provided with large sums of money or even short sums of money for their expenditures. So the difference is that in case of quantitative easing, the public are indirectly being benefited, whereas in case of helicopter money, the public are directly receiving money from the central government. Well, please note here, the money so received by the public through helicopter money need not be paid back to the central government. And since these large sums of money are being printed at the request or order of the central government, the central bank is at the risk of losing its independence. This is a very well based concern, because if the central bank keeps on printing fresh money every time the central government keeps demanding, it might end up being a puppet in the hands of the central government. And essentially, that is not why the central bank was established in the first place. And the next difference is with respect to the risk of high inflation. In case of quantitative easing, the situation is normal. This means the amount of fresh money that is being injected into the economy is based on the government bonds, that is bonds issued by the central government. So there is some sort of accountability with respect to the money that is being injected into the economy. Whereas in case of helicopter money, there is high risk of inflation. It is because here the central government is providing its citizens with some amount of money for expenditures. And this naturally and essentially increases the demand in the economy and ultimately leads to higher inflations. And specifically, these are the reasons why even the Milton Friedman called this an unconventional monetary policy tool. And that is the reason he said this tool should be used sparingly and not very often. And this takes us to the next topic, which is about the disadvantages of helicopter money. The first concern here is with respect to its feasibility in the long run. See, unlike quantitative easing, using helicopter money as a tactic is not reversible in the long run, because once the money given to public is gone once for all, you cannot take it back. So because of this, experts argue that it is not a feasible solution to revive the economy in the long run. So it should be treated like a temporary mismatch arrangement in the hardest of hard times. And the second concern here is with respect to the overinflation. See, any country's central bank sets interest rates to reach its economic growth targets. But while giving helicopter money, the central bank cannot use interest rates to recover any costs, because the money is not linked to a borrowed asset like bonds given by the central government. Instead, the money is directly given to the public. This may lead to overinflation and eventually cause damage to the central bank's financials. And the last and main concern is with respect to the devaluation of rupees or any currency for that matter. Here, helicopter money means printing of fresh currencies. So as you print more and more currency, the supply increases. When the supply of domestic currency increases, its value in the international market will eventually decrease. And moreover, it could also discourage speculators from buying this currency, as it is less likely to perform better in the future. And hence, if you take the case of Indian rupees here, in the long run, it will definitely get affected in front of dollar. Now, besides all these disadvantages, as per the Milton, the biggest concern was that in the long run, people might get addicted to such money. So every time when the economy is not performing well or they are jobless, they start expecting such kind of benefit from the central government. And this will eventually become a habit. Now, even with all these disadvantages in place, why do we still need helicopter money now? The reason is quite simple. The global economy as a whole is running low because of the lockdown imposed in the wake of COVID-19 spread. With shops and companies being shut, people are losing their jobs and ultimately they are left with nothing to spend. But any country's GDP is mainly dependent upon the consumer spending. For example, in US, 60% of the GDP is dependent upon the spending by a consumer. And the government's idea is that when the public are given money in the form of helicopter money, they shall start spending. And this will eventually help the economy get back on the right track. For example, the USA has already announced a relief package worth $2 trillion. Under the package, all of the unemployed youth in the USA are being given with some relief amount. So keeping all the disadvantages and concerns in mind, the central government in India has to take the right call at the right moment. So that's it for today, guys. Thank you.